Good day everyone and welcome to episode 2, part 2 of Learn, Invest, Earn. My name is Soundarya Lakshmi Narayanan. In today's video, we are going to continue with the other different types of investment options available. But before that, if you have not watched part 1 of the video, do click the I button above or use the link in the description. Watch the part 1 and come back here. Let's start where we left. NPS, National Pension Scheme, is a savings scheme introduced by the Government of India where you can invest in a systematic investment plan every month and reap its benefits post-retirement. It has a lock-in period until you reach the age of 60. Once you reach the age of 60, you can withdraw 60% of the amount and rest 40% you have to use to buy an annuity. Annuity is nothing but a financial product where you can invest lump sum and get income every month or year. Systematic investment plan or SIP is nothing but where you invest some fixed amount of money every month. This can be automated using your bank account as well. The minimum amount required for SIP is 500 rupees. Gold. Gold is considered to be one of the most famous types of investment in India. You can invest in gold by physical form, trading in gold futures and options, electronic gold. Gold is considered to be a slightly high risk category. Real estate. Real estate investment type is nothing but buying and selling of land, apartments and commercial buildings. There is two sources of income that you can get from real estate. One is rental and the second one is capital appreciation. The risk of investing in real estate depends on location of the particular land and also demand for that property. Mutual funds. Mutual funds are financial instruments created and managed by AMCs or asset management companies. Asset management companies usually create mutual funds by collecting a pool of money from investors, and this money is invested in many things like equities, bonds, etc. The investing of the money in various securities is taken care by a person called professional fund manager who does maximum diligence check to give the highest amount of returns possible to the investors. Mutual funds can be for long-term goals, short-term goals or for tax saving. Mutual fund is quite a less risk category as there is diversification in many securities. Shares. Shares are financial instruments issued by companies that are listed to the general public. Buying a share from a company means that you're buying some part of ownership of the company which is directly proportional to the number of shares of that particular company that you buy. Owning shares entitle you voting rights, profit sharing and also the risk associated with that particular company. Shares can be bought in stock exchanges through stockbrokers. Shares carry the highest amount of risk. To invest in stocks and mutual funds, you need a Demat account. To open a Demat account, use the link in the description. I'm pretty sure all of you are excited to start your journey of investment. Do subscribe to the channel, give this video a big thumbs up so that it reaches a lot of new investors. Also comment below which is your preferred investment type. In the next video, we are going to discuss about the risk and returns of different investment types. So, do watch the next video.